Good morning on this Friday morning. I'm Pete Najarian. This is The Take for Market Rebellion. I'll tell you what, we have had a volatile week. Let's be honest. Now, when you look at volatility, and this is why I say this, when you look at volatility, we've only been up and over for highs over 20 on 2 different days over the last, call it a month and a half or thereabouts, maybe even a little bit longer than that. And one of them was yesterday. And so here we are again, as we were talking about, volatility was creeping up. Well, today we're actually seeing volatility come in a little bit. It's Friday, a little bit different, but I'll get into that in just a minute. But let's also understand, we start pricing in the weekend. And that's exactly what, as a former market maker, stood on the trading floor, buying and selling and doing all that stuff. I start working with my computers when I'm standing on the trading floor, and I start shifting everything. If they're selling me too many, I'm going to adjust. Supply demand, that's what this is all about. And when I adjust, I'm going to adjust by going a day in front and then another day in front. So at some point in the late morning, early morning, mid-morning, somewhere in there, depending on the activity, I'm going to start shifting and pricing out another day. When you do that, that makes volatility come down a little bit. And so it looks like volatility is coming in. We'll actually find out when we get towards Monday how much the volatility really did come in. But enough about that. The disconnection still there. And as a matter of fact, you look yesterday, take a look at what was going on with the Dow itself. The Dow had another amazing day. It hit new highs again, and it had an absolutely incredible run throughout the session, but it added about 200 of those points in the final hour or thereabouts. And so finished up 318 points. NASDAQ was really in the red basically for the majority of the day. And then we get this great rally late of 100 plus points just to finish in positive territory. It finished up about 50 points or so. So that wasn't so bad either. But you look over at the price of crudes, kind of stuck right there, 64, 65, right in that sort of a range. Our volumes yesterday were really strong once again, 36.3 million contracts trading again. So we're in the mid 30s. So that's been, and we talk about this all the time. If you need the knowledge to understand the derivatives markets, the Market Rebellion team is the team you want to come to, because these guys are unbelievable educators. And this is the growth area. And I bring this up all the time because it's been true for multiple years. It's actually been true since I started CNBC January of 2007. Take a look at what the volumes were back then. We're talking about a couple million contracts. In the last couple of years, we were in the 20 million contracts. And all of a sudden you get to 2020, we had an incredible year. So volumes just continue to get higher daily averages. And it's an incredible spot to be where you can use some of that leverage and have a better opportunity oftentimes. Bitcoin planted right around that 57,000 level. We had copper. Now, we're going to hear more and more about this, but we don't hear enough about it. And so we do hear some about some of the pricing, inflation. I was just over at a friend's house the other day, and he was talking about lumber prices just being astronomical and talking about cable prices. That's copper, guys. That's unbelievable. How, take a look and talk to anybody about what's going on, and they will tell you those numbers are jumping, and they're not just doubling. In many cases, they are going up far more than doubling. They're tripling, quadrupling. It's unbelievable what's going on in terms of a lot of the different areas of the commodity space. So sectors yesterday, everything was in the green. We had financials leading. We had consumer staples. We had technology that was trading really well. With the financials, I want to point out one. Now, Capital One. Why do I point this out oftentimes? And I've brought it up on multiple occasions just this week. Not because it's something that I own, but why do I own something like this? Well, it's all about performance for me. And Capital One, and we talk about it all the time, but the revenues, the big chunk of their revenues does come from credit cards, but nonetheless, you still got the banking side as well. But take a look at what their performance is. All we hear about every day when we hear about financials, what do we hear? We hear Goldman Sachs. We hear maybe Morgan Stanley. We always hear JP Morgan, Jamie Dimon. He's wonderful. Let me give you a year-to-date coming into today. JP Morgan up about 28%. Fantastic. That's an unbelievable year. Goldman Sachs up about 35%. Again, unbelievable. Capital One, 58%. So that gives you a little bit of an idea. You want to go where you think you've got the most bang for your buck. And this was an argument that I had for multiple years on the halftime report with people, which was Target and the potential for Target versus Walmart. Go back and just take a look. 2, 3, 4 years ago, Brian Cornell, when he came in and started refurbishing all the stores and doing all the things that they have done and bought Shipt and everything they've done, just take a look at the performance of Target versus a Walmart. Doesn't mean Walmart hasn't done well, but just take a look at that. I encourage you to do that. I talked about technology as well. How about Oracle? Oracle's been an unbelievable performer, doesn't get talked about nearly enough. It's near its highs. Year to date, it's up 40%. Yesterday, we had some January buying of the upside calls in there, looking for even more upside in that name. So is it over for old school tech? I don't think so. And I think a lot of folks are looking, and we see this all the time. We talk about it each and every day, these high multiple, no multiple type stocks versus old school stocks. Some of these old school stocks, not all of them, but some of them have really done a magnificent job of transitioning into the right areas where they actually are growth companies as well. And they are returning to bigger and more growth all the time. So getting into today, we come in today, the NASDAQ's absolutely screaming to the upside. It's up 180 points in the pre-market, and yet the Dow was flat. So this time the disconnect is going the other direction. We open, you look over at the Dow, it's down 50 points. You look over at the NASDAQ, it's up about 60 points or thereabouts. Quickly, the NASDAQ's running, it's up 100 points, 115 points. Last I looked, NASDAQ was up about 170 points, but wow, the turn and burn that we saw out of the Dow, absolutely extraordinary. It all of a sudden flipped over from being flat to up 100 or thereabouts in less than 30 minutes. And then we get to where we were at about 9:30. We were up about 150 points there. Anything can happen throughout the day. We all know that. This is just the first hour of the day. But again, just some of the power of what's going on and that disconnect that sometimes it's there. Parts of this week, we've had that huge disconnect. We started the day that way, and now they're both moving in tandem to the upside. So that's something to keep an eye on. And will we see that hold for the rest of the day? Time will tell. Volatility, as I mentioned, is absolutely collapsing today. And you take a look at that VIX, as I mentioned, it hit actually 2185 not too terribly long ago, went over 20 yesterday. And today we're starting to see the VIX absolutely slide to the downside. I think the last I saw it was in the 17s. So really seeing the volatility index come in very dramatically. Gold and silver started the day up about 1%. They started to fade just a little bit. But I take a look at these sectors and I'm looking for strengths. And I see healthcare, I see technology, not necessarily sector, but take a look at the semiconductors. They're up about 1.5% last I looked. Biotech was up about 2% the last time I was looking at this. Financials were negative. Industrials were negative. Those flipped and started moving a little bit to the upside. So two stocks that really stand out from this week's one specifically is Peloton. Peloton started off the week on Monday, a $97 stock. Now, this is a stock that's been all over. You want volatility, take a look at Peloton. The stay at home, this is the poster child of this whole thing. It was I believe it was up into the upper 100, 170 type range for the highs. It's been all over the place. Anyway, 97 bucks on Monday, 95 on Tuesday, 90 on Wednesday. Yesterday it was 84. After their earnings, they didn't include everything. They slid a little bit. And then today actually jumping up pretty nicely. Last I looked, they had been up about 91, then they were trading around 88. But a really, really volatile name. And we know all the story, the backstory about what's going on recently with the treads. But I think the real story is, as we come out of this with vaccines and everything else, will Peloton continue at anything close to the pace that they have been on? Great fundamentals within Peloton, but are they going to be able to grow at the same rate? That's a big question. Expedia is the other name that stands out for me. It's up 8% today. We talk about travel all the time. Is it coming back? They're saying it is. They're talking about unbelievable rebound in travel. And with that, we're seeing a really nice bounce there today as that stock is moving to the upside. I got two unusuals, and then I'm going to zip over. I got the halftime report in just about an hour and a half or thereabouts. So first one's going to be Uber. Uber hit yesterday. They're buying August. They're buying the August 55 calls. Today, stock's trading a little over 47.60. We got a buyer of 10,500 of the December 55 calls. Those are going for nearly $4. Here's the deal. When you buy time, you have to pay for that time. You're paying for that time in theta. And so we take a look at that, and that's why those numbers look pretty high. A $4 option that is already nearly $8, $9 out of the money. So it gives you a little bit of an idea. A lot of things have been very short-term, people looking for very short-term moves. In Uber, August is no longer short-term. That's out there a little ways for me. And then all of a sudden you look at this one with December. Somebody's buying a little bit of time and looking for Uber to make a nice solid move, including the buyers that we had yesterday. Financials. Just yesterday, very late in the day, we had some huge XLF buying. We've seen other different financials throughout the week getting bought. And today, Bank of America. These weren't huge, but it still stuck out to me just because we've seen so much in the financial industry. Trading right around 41.40. They're right around in that area. A buyer of 2,000 of the May 28th. That's the last weekend in May. So May 28th, the 42 calls. Those are going for about 77 cents up to about 82 cents. And just looking for a move. And Bank of America has been moving. It's been an absolute great performer of late. And keep an eye on this name along with the rest of the financials. Yes, there's going to be ups, there's going to be downs, but the general direction that we are seeing, at least in the options world, is people are expecting to see financials continue to start moving to the upside. Folks, have a great day of trading. Look forward to seeing you in the halftime report. Until then, just have a great day of trading, and I'll see you later.